Welcome to Behind Closed Books, the podcast where business owners and experts reveal the financial decisions that shape their success. Each episode brings you unscripted stories of turning points, hard calls, and the numbers that changed everything to pivot, recover, and grow. If you're building a business and ready to think differently about profit, pressure, and progress, behind every smart decision is a story worth telling. This is the show. Here is your host, Craig Sheets.
Hello, everybody. Welcome to another episode of Behind Closed Books. My next guest today, he and his wife, Lisa, are in real estate and known as a power couple. They hold various licenses, including graduate of real estate institution, military relocation professionals, and they're working on their global luxury credentials. They've been doing real estate for 9 years and been named top 5 earners in the Jacksonville area for the last 5 years. With his 24 years in the military, it has trained him well on how to find real estate in any market. Both he and his wife bring different skill sets for all their clients they have. They focus on each client as if it's their only customer at that time. When they're not working, they're camping in their RV in and around the East Coast. They have 2 adult children who live in the Jacksonville area. With that, everybody, meet my next guest, Brad Stone. Welcome to Behind Closed Books, Brad.
Hey, Craig. Glad to be here.
I'm really excited to have you on today. So many of my listeners and clients are always asking about real estate and different aspects of real estate. So have a professional on is going to be really exciting for people to listen to. I can't wait.
Yeah, it's always fun to talk about. And everywhere you go, people are asking questions about what's going on with the market, what's going to happen with interest rates. Like I have a crystal ball.
Yeah, they want you to say everything. So I thought I got a couple of topics here I thought we can talk about today. So I thought we could talk about rental real estate. A lot of my listeners and clients are always asking about rental real estate. Any changes from the latest round of tax regulations? Maybe I can add some ideas about that. New rules and effects for appraisals. That's something I'm not really familiar with. Maybe you can shed some light on that. How does the revenue structure work for real estate agents? We can talk about that. Commercial real estate, leasing options. There's so many different options, but we can kind of touch on that. I know there's all the different fancy terms and triple net lease and all that good stuff. We can hit on that topic. And then various tax effects of real estate ownership. And I can kind of add some light on, what is deductible and what isn't, and kind of demystify that for people, along with common deductions for rental real estate, and go through more ideas. Maybe even cost segregation is right for some people. Ownership structure for real estate, whether it's LLCs or S Corp. And then maybe you can talk about how the revenue works for realtors and how that money comes into you a little bit. And I can shed some light on maybe what's beneficial for realtors and how they can structure themselves as a business rather than a personal. Ways of exchanging real estate, 1031 exchange versus sale, when it's in the lowest tax bracket. We can talk about that. And maybe talk about the latest trends in real estate. I know it's a lot, it kind of sounds like a lot to talk about, but why don't we get started on, I think, rental real estate. It's such a broad topic and there's so many things to talk about. Let's go into your side of the topic first and talk about maybe what's changed with appraisals and new rules and effects of appraisals. If that's something that you want to talk about. I know there's tax side of things. I can add a lot of, some knowledge on it, but how does that work?
I'll say first, as a real estate agent, I rely on a lot of experts, just like you as CPA and taxes. I have attorneys, title companies, qualified intermediaries for like 1031 exchanges. A lot of my job is having these contacts and not trying to stay in my lane and not everyone else's lane. So I can talk about some of these things and some of them in kind of some detail, but the real thing that I bring to the table is knowing who to talk to get the legal advice, the tax advice, the ramifications of if you do this and then that, and things like that. So
with rental real estate, a lot of times people get excited. They go out there, they think, okay, either as an individual, they're going to buy a property. And then what ends up happening from my perspective as as their accountant, I'm like, well, you got to think about yourself now as an entity. You're not just an individual buying real estate. You have now an exposure when you buy rental real estate. If something happens, or if there's a liability, maybe one of your tenants trips or a ceiling collapses or a cabinet falls on you. You have to be morbid or anything, but people can get hurt. So what they want to do, I always recommend, is they structure themselves as a LLC, and that nomenclature means limited liability company for the listeners out there if they're not familiar with it. And what I always joke with and say, it's like a box. It's a box around you that protects you as the individual from liability. Of course, there's some liabilities that go through LLC, and I'm not a lawyer, but there's some liability protection there. There's tax planning you can do. You don't always want to go S corp. You don't always want to go partnership, and that's where you're going to talk to your tax person. But from a realtor's point of view, do you handle rental real estate clients different than you do residential real estate clients? It's both residential property, but how do you go at that from a different angle?
We do. I mean, when I sit down with a client that wants to buy income producing rental property, I have a lot of questions because I want to know some of those answers, or I want them to be aware of all of their options, how to take title. Are they taking title as an LLC, or are they taking title as an individual? What's the liability with each? Um, Making sure they have proper insurance and like an umbrella insurance policy. So I have really good insurance guys that I lean on for that. What are tax ramifications if it's this way versus that way? How can this be structured to help them down the road, is like to do a 1031 exchange, or when they sell it, what are they going to do with the profits they made, the gains, how that's going to be affected by taxes, and so all of it has ramifications and pros and cons.
Do you slow the process down then? Some people kind of rush into it so quick, like, I just want to buy a property. You might say, whoa, 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 whoa. Who's your accountant? Who's your insurance agent? Have you got an appraisal? Have you thought about the future? So sometimes you have to be a guide in a way, right? Or a Sherpa.
Yeah, that's really what we do. Okay, let's hit the brakes. You got 150 grand in your pocket and it's burning a hole. Well, let's slow down. Let's not wait until we get to closing to realize that you want to put this in an LLC, or you want to put this, this house might be income producing, but maybe your daughter's going to live there. So maybe you want to put her on the, you know, have her on the title, on the deed, so that she can homestead it. That's going to save more money because it can be income producing, but if it's her primary residence, it can be both. And obviously, if she moves out at some point, then it's got to you can't homestead it. But there's a lot of ways, and everybody's situation is different. And so you can't, there's no specific path that just covers everybody, is what I'm.
And I like and I mentioned that in the intro about you. It sounds like you treat each customer as they're their only customer, and you're not the McDonald's. You're like, okay, wait, this applies to everybody. Do this. This is what we do. You sit down and talk to the person, slow them down, and say, right, what is best for you, client, or for customer A. You speak to them as they're the only person you're dealing with. That's a special service. Not every realtor does that. I bet. That's impressive.
And a lot of what we do is we bring up these questions for them to come to an answer, and then we give them the expert in those fields. Hey, you need to talk to this guy. We give them a name and a contact. Hey, you need to talk to this guy, insurance. You need to talk, and so they need a lender. So we give them some lenders that'll deal with whether it's investment properties or their primary residence, whatever the case is. And we will lead them to those people. And the people that we refer, we like to think that they are the same as we are. They're going to sit down and coach the client. Hey, maybe you're not quite there. maybe you need to do XYZ before we start throwing offers on a property, and I'll have the discussion with the people. Uh, I know we've had customers that we've sent to you, and I'll call you and go, "Hey, Craig, what do you think? What's the best way to go about getting what they want as far as from a tax standpoint? And what can we do to work as a team?"
What I end up doing is I kind of jump in and say, well, as you said, I'm like, hang on, let's deal with this bubble here of tax and structure and ownership from what's best for you in the future. And just like you said, who's going to live there? And are you going to rent this forever? Is this your forever rental home? Are you going to live in it for 2 years and then you can convert it to a rental property so you can qualify for the 205-year rule? So the 205-year rule is interesting. You can live in the home for two of a 5-year period and still rent the property out and still have some part of exclusion for selling the home. The IRS allows you to live in a home and have a exclusion for married or single individuals, and you have to live in it for a certain period of time. And sometimes they'll say, right, you want to live in that house for a bit of time first. And if you want to rent it short term over a 3 to 4 or 5-year period, if you're renting it over a 10-year period, then yeah, you want to just keep that straight up corporation, LLC, whatever is best for each person. And I think working with you, I've noticed you and Lisa as professionals, you're always there giving me information. You're feeding me about their background. You're not just saying, right, there's Mike, good luck. It's like, okay, here's Mike's situation. Here's what we think. You as a tax expert, let us know, but you feed me information. And it's interesting how well you know each person. It's like, yeah, Mike and his family and his kids. It's not just Mike or Tracy. It's like a person, an individual to you, and you know a lot about each individual person, and that's great. I think that's what brings a good real estate realtor out of you guys.
Yeah, there's just so much, and some of it is limiting your tax liability, not just, that, okay, if we 1031 exchange, you're kicking the ball down the road for your tax liability. So for some people, that may be a good thing. For some people, maybe it's not for the situation, when they're trying to do a 1031 and they want to take some money out of that, there's a tax liability with that money, and then they're going to reinvest the rest of it, and what their options are. There's so many things out there that are misinformation about 1031 exchanges, and
Well,
just
1031 exchange is interesting because what happens sometimes is people are, let's say, in retirement years and they want to do a 1031 exchange, yet they're in the lowest tax bracket they've ever been in their life. And I'm thinking, this is the opportunity for you to sell the real estate now that you're in a low tax bracket, because you want to take advantage of being in a lower tax bracket and being in a better situation. Whereas if you're in your higher income earning years, you can bump up to the highest long-term capital gains rate quicker. There's a flow to how much you pay, even over in things that capital gains rate is one number. It is, but it's flowed based on your total gross earnings and your revenue. So sometimes doing 1031 exchange isn't the best way to do it when you're in your lower income earning years when you're retired, versus if you're in your higher income earning years and they want to sell it. I'm like, well, wait, hang on. Maybe a 1031 exchange works better for you now because you are in a higher bracket. That's the word we refer to in taxes, different brackets. And if it's a commercial real estate versus residential, and you mentioned earlier, we talked about appraisals, and there's got to be some big things about appraisals you look at as they're going to buy the property. Do you walk them through like different aspects? What's the condition of the roof, and how old is the air conditioning unit? Or you just say, right, here's this is Zillow, and that's it on Zillow, and that's your appraisal? Do you do more
I
than that?
guess what we're saying is there's a strategy that you got to come up with leading into all of this. And part of the strategy, depending on whether it's commercial or residential, um, appraisals, if you're gonna finance part of that purchase, there's gonna be appraisal involved. If it's a cash transaction, uh, there's no appraisal required, but depending on what it is, you may still want to get an appraisal to know actually how you're going to offer, how you're going to structure your offer for this property. And in commercial, that's more of a due diligence. You want to evaluate if it's income producing, if it's for your own business. So there's so many things to look at. Everybody's different. If it's for your own business, like if I want to go buy an apartment building, I'm going to get with a CPA to go through the books, to look at what it actually is producing, what its tax liabilities are, what are the maintenance costs for the years, and develop that before they go, putting their money
And
on
there's different strategies. If it was commercial property, then I might lean on someone to say go into a partnership structure versus just to do an LLC and put it on your personal return on a Schedule E, because with a partnership, you can exchange the real estate and you don't have to recognize the gain. If you want to get in with a partner and then you leave, there's different tax benefits of having it as a partnership rather than having it as an S corporation. You have to report the tax when you leave the S corporation versus a partnership. You can change in partners a lot smoother and there's no tax effect. So yeah, so that's a really good point. As you mentioned, commercial property, apartments versus residential property, totally different structure. And then that's when you gotta buff it or just on that person's situation.
So kind of to jump back to the appraisal aspect, um, appraisals are very subjective. They're looking at like properties, sometimes with commercial, sometimes even residential. It's hard to find like properties depending on the area that the property is in. But, they're looking at the value of the comps, um, and how, like, ideally an appraiser is going to come in, you're looking at house A, they're going to find B, C, and D, and they're going to be the exact same house. And then they're going to bounce them off each other. But they rarely can do that.
I was gonna
Sometimes,
say that's hard to do. Yeah, like kind of.
right? Usually the house might have uh, a granite instead of a Formica countertop. That actually makes a difference. Maybe it's got an extra bedroom. Maybe it's got an extra 200 square foot, but the bedroom layout is the same, And so those are all things that the appraiser's looking at. Um, the value of a pool, the value of, is it on a lake? Is it on a preserve? Does it have, a skyscraper behind it, or a tower? Does that cell tower hurt the value? Well, it does, but how much? And those are things that are really difficult to get. Every appraiser you talk to gives you a different answer, but they all have a process to come up with that. And they can be very labor intensive. So, as an agent, before you get to the appraisal, like if you're going to sell property, we do like a comparative market analysis where we're basically doing what an appraiser does, but we don't get quite in the weeds that they do, because we're looking to evaluate the property, but we're bouncing it off of recent sales. And the buyer's market is just, it's a different animal than the appraisal. There's not as much oversight in what we're doing, but we want to get the most for the customer, So it's really trying to get the price of that property in the right, plus or minus 3%, so that we get the attraction of some buyers, or if we're pricing it for the buyer, we're taking a buyer to the property, we're going to try to price it in a plus or minus 3% for them to offer on that property.
So you might have a customer that you're trying to sell a house for who's really excited when you get that valuation high, but you might get a customer who's buying property and find out that the house is worth more. And you're like, look, that's how the appraisal works. Because you're doing the appraisal, but who's buying and who's selling, you're going to affect them totally differently with the valuation, I imagine.
Exactly. And I mean, we could do a whole podcast on how appraisals affect financing and all of that, because there's a lot of strategy with that, with pricing, with offering on a house that's overpriced. Because if it's overpriced, maybe you offer their ask to get in the deal, but then if it doesn't appraise, now that's a whole nother situation. And does your buyer have the money to pay over appraisal. And a lot of people are like, well, nobody's going to pay over appraisal. Well, it happens a lot.
Oh, I bet it.
Financing, but they bring more money so that they can pay higher than appraisal because maybe that house is worth it to them. For whatever reason, maybe their mom and dad live down the street and they're willing to, I don't like the term overpay, because they're paying what they're willing to pay for the house, which in reality is the value of the house.
It's passion over reason. If there's a passionate reason for it, sometimes reasoning doesn't take a hold. It's more passion. As you said, parents or kids live down the road, or it's close to the beach and they don't care. They've always had a dream of doing that, living in that place.
And then kind of in the same vein as that, appraisals is also like insurance and doing inspections on the home, because insurance will look at appraised value when they're trying to insure the property. They're also looking at inspection reports, a 4-point and a wind mitigation inspection to determine, are the systems of the house safe? Are they intact? Are they upgraded? And that all of that affects your insurance rate for when you purchase the property.
That's really interesting. A lot of people don't focus on the appraisal and inspection process. They're just like, I want to buy real estate, and they jump to the step 6 and they forget, wait, we had to do our due diligence, appraisals, inspection. You could have a bad roof and say, yeah, the house is worth this, but it's an $80,000 roof on the house and you're going to have to replace that. And that's going to depreciate the value a bit. So you need to offer a lower price because that $80,000 roof is going to hurt you in the next year, 6 months.
Right. And affect the financing, whether you can get the financing or not, because you've got to be able to get insurance to get the financing.
Right.
And so, they're all about, my job is to help the buyer or the seller navigate this process in a way that's going to help them the most. And so, yes, inspection's huge. If the house has major issues, obsolescent issues that can't be fixed or are extremely expensive to fix, WDO, your wood destroying organisms, termites, mold, things like that. I don't want to put someone in a home that's going to make them sick.
No, those are things we don't think about.
So this is all stuff that sometimes, people find that house that, man, they just got to have it. And you're like, well, hold on, let's get you there, but let's get you there in a safe manner and make sure that the house is livable.
Because I look at it from a tax perspective. Usually I got tunnel vision, because when I'm working with clients, I'm focusing on the tax aspect. And then, like you said, you're working with insurance people, they got tunnel vision, and then you're working with lenders. But I think where you're kind of the commander of the ship, you're saying, right, tax person, do your job, insurance, do yours, inspect. But you're there kind of still guiding the client as a Sherpa down the process of buying real estate and what's best for them.
I feel like I'm herding cats a lot of times. I'm getting everybody to head in the right direction to get this thing over the finish line, but do it safely and do it to the client's best interest. And sometimes it's really hard to say, hey, look, this is not working in the way that's going to be best for you, and maybe you need to just pull out, or maybe we can negotiate with the seller to do XYZ to the house, and it's all about that. And sometimes you almost have to save somebody from themselves.
You do. That's an interesting word. We use that in trust tax accounting. We call it saving someone from themselves, protecting you from yourself. That's exactly the words we use. So
I'll buy that house whether it's eaten up with termites or not. But do you really understand what you're saying?
in 3 years, a client back and go, what's up with these termites? Like, man, I tried to talk you out of that. We talked about this. So a couple of things I wanted to touch back on tax effects. And I know we're here to talk about, you as a realtor, but I wanted to kind of touch and, I wanted to add a little bit of topic on taxes. I always joke and say I'm the Gordon Ramsay of accounting. I want to sprinkle a little bit of tax and accounting on top of everything. So from a tax perspective, there's a couple different ways people can own real estate. Each kind of has their own effect to it. Individually, if it's an individual owner and the government views a husband and wife as one person. So always people get confused saying, oh, my husband and wife, my wife and I are buying the real estate. We're two people, but the IRS views you as one person. You're legally married. You can't really be separate. So you can't be two partners. You're one partner. So partnership isn't always in the cards for a married couple. So individual is usually the best way to go is as an LLC. And this is something interesting. People get real confused on the nomenclature LLC versus S Corp. They say, oh, I'm an LLC. I'm like, great. That means nothing to me because any tax structure could be an LLC at the federal level. So an LLC is a state acronym for limited liability company, and that affects what state you're registered in and protects you for legal liability purposes. And it's done at the state level, Delaware, Florida, Texas, New York, wherever you live. You set up an LLC, and that's your structure in the state and in liability and legally. But from a federal level, you can then convert that LLC into an S corporation, where you have a separate entity that owns the property, but it's what they call pass-through ownership to the individual. So the taxes are paid at the individual level. And then you can be an LLC, not very often, and be a partnership. And the partnership then, again, owns the real estate, and then it passes through legally tax effects onto your personal. Sometimes you can be an LLC and be a C Corp, not very often. There's different ways, but usually the real estate, I recommend people either individually own the real estate themselves as an LLC and report it on their personal return. Or if you're going to be in a conglomerate of multiple investors, partnerships are the best way because you can bring in and out partners within a partnership and not have a huge tax effect. It's a big advantage from a partnership or a co-op. Co-ops are more in New York City and LA. That's very strange, but co-ops are more for like apartment complexes. That's more when you see co-ops come in, but co-ops and partnerships are good for big commercial property. And when you own real estate, people forget there's deductions you can take that you don't realize, things like your own cell phone. You can take your mileage to and from the rental property. You can take your internet if you're renting the property. You talk about depreciation to make sure you have the value right. So when they're working with you and the value of the property comes in, you got to make sure the property is depreciated properly. But within that structure, you got to make sure you're viewing this real estate as a business. What things do I need to run this business? Do I need supplies? Do I have management fees? I'm working with HOA fees, real estate taxes. You got to take all those into consideration to talk to your accountant to help you squeeze the deductions out like the best way you can to get as much deductions on that real estate property as possible. But what people forget is if you're not a real estate professional like you are, there's limitations on how much you can deduct. It's $25,000, but there's phase outs. So if you earn too much, you can't take that $25,000 deduction if you're not a real estate professional. You got to be actively involved in your rental property. You can get up to $25,000 loss if you're active. If you're not active, you get no loss. But if you're active but not a real estate professional, you're limited to 25,000, and that 25,000 is phased out based on how much money you make. So somebody making $1 million a year is like, yeah, I'm going to take the $25,000 deduction. It's like, well, you can't. You make too much. So maybe then it's better to be an S corporation or a partnership or a C corp owning the property, so you can take those losses. And then cost segregations. Cost segregations are important. That breaks down a house. Think of a house like I don't know, like a puzzle. It's like different pieces in the house. There's the properties and components that make up maybe 5 or 7 year property, like cabinets or countertops. And there's parts that are 15-year property, like a roof possibly. And then the structure itself is 27 and a half year. You can't just say, oh, my real estate is depreciated at 27 and a half years. If you pay for a cost segregation, they'll break out your house like a puzzle and say, right, these assets are this many year depreciable, 5 or 7. These assets are 15. And then the rest is 27 and a half. So you can have a quicker and more rapid depreciation rate to rate the house off. Do you deal with cost segregation often with your clients?
I mean, I do when we get to that point in the process. They've talked to their accountant and they understand what they're looking at with that. My part is more as far as looking at the property itself and the age of those items. How old's the roof? How old's HVAC? Is it a large commercial building that HVAC might be $300,000 to
Right.
upgrade?
Big piece. You want to take that cost seg. Right. It's worth it.
Right.
You got $100,000 house. You pay 60 or 6 or 10,000 for a cost seg. You're like, is that really worth it for $100,000 rental real estate property? It may not really be viable.
Yep, fire suppression systems. They're very expensive, but when you're looking at a commercial property, it's not the entire system that has to be replaced to upgrade. It's pumps, sensors, all of that kind of thing. And so getting the right people in there to inspect that, to get a life expectancy of what's left on the system before you're going to have to do some upgrades.
That's a really good point. That's an interesting point. So cost segs are a big thing we can deal with clients. Another thing and I think you're aware of this as well, is in the state of Florida. So I'm speaking to the state of Florida now, not other states tax wise, is rental real estate now used to be subject to sales tax. And as long as you have a long-term lease on the property, so that's not Airbnb, that's not VRBO, or people got Verbo, I guess I say it the wrong way, VRBO. As long as it's a long-term lease on the property, you no longer have to charge and collect sales tax. And I'll tell you, that was a real nuisance and headache for my individual clients. I got to set up a tax ID number for the state of Florida. I got to collect sales tax. I got to file the DR tax return for the state of Florida. Then I got to report that on my personal tax return. So you're swapping rental income on one and the deduction on the other. And you're charging yourself, and it's almost like comes a circular loop of benefit, and they're charging sales tax on that property. So it's a really big piece to make sure that people know now there's changes to the rules since the latest round of tax regs, the OBBBA, OBBB, they call it. So talk to your accountant, and this is a state level, but make sure you speak to your accountant about some of the changes that happened, because it could affect you. Maybe you're doing the wrong thing and not even knowing, and you're paying things you don't need to pay on that. So it's something important to think about.
And believe it or not, that can even open up what somebody can purchase. Because if they're not paying taxes on it, they can spend more money.
Wow, I never thought about it. That's a budgeting purpose.
Yeah, it all plays together.
And a lot of the rules too, which is great. So we talked about purchasing property. We talked about a little bit about 1031 exchange, how important that is to determine from a tax perspective. And you mentioned from an individual buyer perspective, you slow the process down too, to say, sometimes thinking towards a 1031 exchange isn't their best option. So it's good to work close with their accountants on that. When to do it, when not to do it. And I work real close with realtors on 1031 exchange. There's a rule. Once you do identify a property, you do want to do a 1031 exchange. We were talking about this before. There's a time period. They have to identify the new property. And I think we were talking about this.
45 days to identify the replacement property.
Okay. So if you say, right, I'm going to do a 1031 exchange, and this is 60 or 90 days later, you're like, you missed the window. You didn't tell me you wanted to do that. Me as your realtor, I need to work with you quickly. You need to tell me.
That's once their current property is under contract. So we list say they're selling a duplex, and they're going to buy, they can actually buy land. There's a lot of talk about, well, no, you can't. Well, you can, but let's make it simple. They're going to buy a fourplex. And so they list their duplex. Meanwhile, they're looking for another investment to roll that money into. And so once their duplex gets under contract, they've already set up the qualified intermediary to handle the transaction, and they've got 45 days to go under contract on the replacement property.
Okay, 45 days. Wow, that's quick. So you need to work quickly and diligently as a realtor to help them through that process, I imagine.
Yep.
And if they don't know that, they can say, by the way, so I've had that situation before where clients aren't aware of what happens, and they're like, great, yep, your tax owed on this sale of your property is, they're like, whoa, what do you mean sale of the property? I did a 1031 exchange. I'm like, did you work with an intermediary? They think in their head they did it. They bought one and sold them. Like, you didn't identify the property and go through the intermediary. You missed the deadline by a mile. It was like 6 months later. You can't do that.
You want to know something really funny? Because 1031s, they're regulated by the federal government, by the IRS, but a qualified intermediary isn't even, they don't have to even have a license.
Really?
There is zero regulation over those guys. So you could go to, a guy with an overcoat. Hey man, you need and it's scary. So yeah, there's a lot out there that can happen. So you got to make sure you're using people that are good and they know what they're doing, and to make sure that everything's.
It's important you know the people in the business to say, hey, listen, stay away from this person, go to this guy. He's a good qualified intermediary. And you guide your clients. That's great. Another thing, so we talked about some deductions that people should take in real estate when they have rental properties. Speak to your accountant about that. We talked about how to buy a property, whether it's an S corp or an LLC. A single member LLC defaults to your personal return. You can do partnerships, co-ops, C corp. But what about leasing properties? If you want to be commercial on the commercial side, do you work with clients often on commercial leasing or advise clients on commercial leasing on occasion?
We do. Commercial leasing is much different than residential. There's a lot more to it. With commercial leasing, like your common types of leases are like your single, double,
Yeah, they come with these fancy terms for basically triple net lease.
single net, double net, and triple net lease, which in layman's terms, with a single net, you're paying the rent and the taxes. A double net, you're paying the rent, the tax, and the insurance on the building. Triple net is you're paying the rent, tax, insurance, and maintenance for the building.
So you're almost acting as if you own the property, but you don't. So the liability is not per se on you, but you don't own the property legally, but you're acting as if you do by paying for all those costs in a way.
Right. And it really depends on the business structure, what type of business it is. Obviously, if you're an accountant, you're probably just going to have an office in a business condo, and it's probably going to be a single net lease. You're going to pay your rent and maybe the tax. Normally, you don't even do that. Normally, you pay rent, utilities, and it's very much like residential. But if you own a sporting goods store, and you need 10,000 square foot, it's going to be a different ballgame.
And maybe it is you can't afford the building, so someone builds it for you, and then you do the triple net lease from them to be able to afford the property in a way that's beneficial to you as the person using the space. Like you said, a sporting goods store maybe can't afford that big, huge warehouse they need, but they need the warehouse, so they'll triple net lease it to be able to get into a property big enough.
And you see that even with chain stores, Home Depots will come in and lease property for 30 years. The owner of the property may build the store, and then they lease the store from the owner, and it's like a 30-year lease. And there's tons of stipulations with that. But yeah, it is really like they own it.
That's like they own it. Okay. That's interesting to talk about leasing. Have you seen a change in the market? Have you seen an increase to buying? Because I know during COVID, the market was red hot. I don't know what happened, but everybody decided to buy and sell houses during COVID. And then I feel like there is a tail down after COVID a bit from how hot it was. It kind of peaked and now it's slowed down. Have you seen anything with the latest things going on in the world out there? Have you seen the market slowing down a bit?
Yeah, I mean, we've seen a lot of change. COVID really put it to commercial and residential. Commercial really tanked after COVID because everybody was working from home. So a lot of businesses tailored down their footprint, their office footprint, or brick and mortar footprint to very little. And so it was really tanking there for a while. Now it's really coming back. A lot of your small stuff, your condos are starting to fill up a little bit. Uh, Commercial, as far as retail, is really doing well right now. Residential went through the roof. Everybody realized, hey, I'm working for home and I'm in a 3-bedroom, 2-bath, open floor plan, especially in Florida. And they're like, my kid's going to school from home. My wife's working from home. I'm working from home. I need more space. And so they were moving up to larger homes, uh, more bedrooms, etc. Then things kind of have calmed down, and 2024, 2025 were much slower. Still a seller's market going into it. And now we've actually hit a balanced market where, and it goes neighborhood to neighborhood, at least in Northeast Florida. Uh, 4% is kind of the threshold to go if you have more, or not 4%, 4 months of inventory. If you're above that, it's a buyer's market. If you're below that, it's a seller's market. But we have neighborhoods month to month going above that line and going below that. So it's very balanced, really.
I never knew that. So there's a formula for whether it's a buyer's or seller's market, and the formula criteria is that for just Northeast Florida, or is that for everywhere for the 4 month
that's
rule?
pretty standard. That 4 months of inventory is kind of they consider that balanced. If it's below, it's a seller's. If it's above, it's a buyer's. And you know, right now, I mean, looking at some of the neighborhoods around here, some of the areas of town, I mean, they really just are going a little above 4, then they'll drop a little below, then above. And right now, things have really picked up. We've had more business than we've had in a couple of years this early in the season. And I think a lot of that is just pent up demand. People have, when you have a population diverse like this, there's so many people that have to buy a house every year. There's so many people that have to sell a house, and they've been sitting on that. And now it's just got to the point where, hey, since COVID, or since the market's kind of slowed down, we've had 2 babies. We need more space. They just have to move, or they've got to transfer, or whatever the case is. They've got more income, so they can move to that property they really want. They're downsizing. I mean, things have been pent up for so long that eventually people have to do something.
Yeah, it kind of comes to a breaking point to what they need to do.
And then you got the people that are like sitting on the sideline waiting. I'm going to wait until the market tanks, and then I'm going to go buy that house. Well, I know people that's been doing that for 4 years, and they are so priced out of what they could have bought 4 years ago. They'll never get back there. And right now, prices in Northeast Florida, for the most part, is really holding their. I mean, last year on average was a 4% increase in price for this area. So things are holding their own, and that's a healthy growth. 4 to 6, 7%. You get above that, and things start getting kind of wonky. But 4 to 6% is a really nice growth rate. With real estate.
Yeah, you don't want to overgrow, and all of a sudden, like during COVID, it's like 20% pop, and you're like, what in the heck's going on here? And you don't want to have it tanking down either, after was 2008, the housing crash, whatever that was. So we've lived through both of those highs and lows. You want to keep it nice and steady in the middle, steady Eddie in a way.
The days where you can buy a house and in 3 years make $150,000, $200,000, that's not sustainable. That is just an unhealthy market. And so hopefully we're past that. And I mean, it was great for people that were able to do that, and they took advantage of it. But for sustainability, that's not the market we want to be in.
That makes sense. Have you noticed the interest rates changing at all since what's been going on in the whole world right now? Have you seen a big dip or?
Yeah, we were looking really good, you know, rates in the low fives, mid fives, and then since uh, there's been so many things on the international scene, you know, the tariffs, kind of the war in Iran, all that kind of stuff. It it doesn't directly affect the rate, but it affects the people investing in the market, their confidence in the economy, and then that's what trickles down to the interest rate. So anything that disrupts that does eventually affect the interest rate. So hopefully we get this latest thing figured out and get past that. We'll get back to normal. We'll see rates decline some more. I don't think we'll ever get back to the one or 2.125, two and a quarter rate, which was just sort of a free for all. People looked at it as woohoo, there's free money, but you know, a good 4 or 5%, that's a healthy.
That's good. That's good for you as a realtor too. So it sounds like that's going to help the keeping things stable now. Will help for real estate and help with you. I've learned a lot from you now on different topics, and my audience is really going to love listening to this. I'm so glad you joined me today on the podcast. There's been a lot I've learned, and of course I know you personally, but I think you've conveyed a lot of information, and I really want to know more about you. Even I kind of know about you, but for my listeners, maybe kind of bring me back to you as a person. And I don't mean from a working perspective, but maybe all the way back to your childhood and, where were you from? Where were you born? Tell me more about your childhood experiences, your family, your dad and your mom. Maybe walk me through some of that. I want to know you, individually as a person.
My dad was a college professor. My mom was a stay-at-home mom. I was born in East Texas, and we moved to the Midwest to Missouri when I was 3. So I grew up in the Midwest. Went in the Navy from college early. Um, did a 24-year career in the military. My wife, Lisa, uh, grew up in upstate New York. She was a school teacher, and she stayed at home, raised 2 wonderful daughters, and so we always kind of had a dream of starting our own business. And so when I retired from the military, you know, I was hoping that was going to be the time, but the situation with getting permanent employment for Lisa wasn't in the cards. So I worked for the government for a few years, as most retired military does. Lisa Lisa was teaching, and then you have one of those conversations, where look, we need to go in a different direction. Real estate is something we've always been passionate about. We've had some really good realtors, and we've had a lot of really bad realtors. We're like, we think we can make a difference there. And so it was a concern for both of us that, well, how much of a difference do you make helping people buy a house or sell a house? Well, turns out that you can have a huge difference in their lives and their financial lives. And so we went and got licensed. Lisa started out full time. I was part time, just helping her while I was still working. And then 5 years ago, I joined her. And I'll tell you, it's been so rewarding, when you help somebody find that house, or you help them sell a house and make more money than they ever thought they would, and they invite you over for dinner. They call you up, hey, I'm thinking about this, and that you just get to talk to them about real estate and what's happening and how they can invest in something, or maybe they want to sell their house and buy something different. And, you get the call from somebody, hey, Joe told me to call you guys. I need to buy a house. And, you know, um, you have friends that are sending you their kids. It's so cool. It is so cool to get them in a home they never thought they were going to be able to get. And it's meeting all their needs. And
That's going back to your childhood. Did you have any siblings growing up? Did you have any other family? You said your dad was a what kind of professor was he in college?
Agriculture economics. And yeah, I had three older brothers. I was the youngest, and was a much older brothers, but it was really fun growing up.
So you got so here's an age differential between. So there's almost like a sibling or parent. Yeah. So they were watching you when you were younger. It's almost as if they were part of the parent household kind of thing.
Yeah, it definitely was a different dynamic. My dad was much older. He was 45 when I was born. So I almost like grew up in the 50s, just because what he brought to the table. He grew up on a farm in East Texas with no power, no running water, and having him as your father, it yeah, it brings some. I like to think of them as values and work ethics uh, to you that are different than some others. My older brother's 5 years younger than your dad.
Wow. Oh my God. Wow. That's a big that's almost like a parent to you rather than a sibling. Not really, but when you're younger, I'm saying when you're younger, it's almost that perspective as a child. You're like, wow, he's so old. That's he's taking care of me now. Did you have to work on a farm at all? Did you have a working farm when you were growing up, or was it just a house
No,
residential?
but I grew up in a very agriculture area. I did work on farms quite a bit, and as a kid, we'd go out and detassel corn and do different work for farmers and, mow grass and stuff like that. It was very typical, small, 10,000 people, population of 10,000 in the town. And then had the college was almost as big as the town.
Oh my goodness. Wow.
you know, Typical Midwest college town. In the summer, it was like nobody was there. And then during the school year, it was a lot of people.
What do they call it? Like a college town, they call that sometimes, where it's the big employer is the college.
Yep. Yep. They were definitely the biggest employer in town
You said
in
it was Missouri or East Texas? You grew up.
Missouri.
Missouri, right. And then I'm thinking that Landman was based out of East Texas, isn't it? Have you seen that show with Billy Bob Thornton, the Landman, and he does all that East Texas type stuff,
I haven't
Midlands?
watched any of it, but that's a funny concept. Um, my family actually owns mineral rights in East Texas, and we're going through that right now with they think they're going to hit oil. So who knows?
Hey, you could be sitting on what is that? Liquid
Liquid gold
gold. That's it. Yeah, I couldn't think of the name.
XT. Yep.
XST, like yeah, that's great. That'd be really the guys are coming up, be like, oh my God, it happened. Oh my God. So you had an interesting childhood. Your dad is a professor, your mom stayed at home, your siblings are much older, you're in a smaller town. So you probably knew a lot of your neighbors, worked hard, built your work ethic, then it brought you to the military, which makes sense because that kind of brought a lot of your work ethic with you to the military, which is probably why you lasted the 24 years and not 4 years, like some people, in and out like a bank robber. So that says a lot about you.
Yeah, my whole family is very military. My dad's a World War II veteran. All three of my older brothers are veterans. Um, Uncles, a lot of military in my family. So it really, I didn't grow up thinking, oh, I'm going to be in the military or I'll be career, but it was always something that, hey, I need to serve my country, and do 4 years, and move forward. Very, very patriotic.
That's great. It shows a lot of the values you come from, and I'm sure that crosses over to your clientele. You bring that hard work ethic with you. You're not mowing lawns, but you're helping them in a path and guiding them, and that integrity and that hard work probably shines through, and they probably feel that. So that's got to be a blessing to your clients.
For sure. It is, and it's really nice to be able to help people with this and really guide them. And it we talk about it all the time. It's very much like when Lisa was a teacher or when I was in the military. We were always trying to take care of our sailors. And this is very much the same. You know, we're trying to protect them from what they don't know, and we're trying to educate them on what they don't know, and just it's a group effort to get them where they want to be.
Might be well, just to kind of maybe to promote you and Lisa as the power couple, and either way, whether dealing with you or Lisa, what kind of clients do you want to look for? Maybe talk to my audience about who you can help, and even if they're not in the area, maybe they can still come to you for guidance, and then you can refer them to a local realtor. But explain what kind of clients you're looking for, and maybe explain the fact that if they don't live in the area, you can still help them. Maybe I'll let you kind of promote your and how they get a hold of you. Yeah, tell me more about that, my audience.
We're looking for clients that genuine, really care about what they're getting themselves into, um, and and that understand they need some help through this process, because people the average person only does a real estate transaction every 10 years, and so things are constantly changing in the way that happens, not only from just buying, but like I was talking about with insurance, with the appraisal, all of that. And so we're looking for people that want to work with a professional. We're looking for, if someone wants to come to Florida or really move anywhere, and they appreciate what we have to offer, we can help them find agents that think similar. So they want to move to Tampa. We'll talk to them on the phone and figure out kind of where they're coming from, what their preferences are, and we'll look for some agents in Tampa that would be able to help them out the best way. We'll interview the agent, and we can give the customer some recommendations. And if none of those seem to fit, we'll find more for them, and then we'll kind of monitor what's happening throughout that transaction, and check in on them. How's things going? And because I mean, we want the end of the day, we want what's best for the client.
Right, that's amazing. And then, do you have a certain property size, commercial, residential? Can you help with anything like with leasing or buying or commercial? What kind of properties can you help people acquire?
For sure, anything residential, most commercial. I mean, we deal with some leasing commercial if they want to buy land. Uh, we have contacts, builders that can do stuff there. Our company has a very large commercial footprint, and so if it's something that's outside of what I would normally help them with, I have really good agents I would refer them to that can take care of, like if it's somebody that wants to buy 20 acres and put a 30,000 square foot warehouse on there and really do a lot of heavy commercial type stuff, zoning and all of that. I've got people that can take care of that.
That's great. Okay, now if someone wants to go through you, how can they get a hold of you? What are some different ways they can get a hold of you and Lisa?
They can go to our website, www.stoneteamhomes.com. They can reach out to me, 904 or Lisa at 904-514-9543. Or they can email us at Bradstone, CBVFL, that's Coldwell Banker Vanguard FL for Florida.com, or Lisa Stone at the same.
Okay, great. And with your background, I mean, you said you can help couples who are transitioning in the military. You can help people who are retiring, retirees. You can help people just starting off out of college. So whatever aspect of their life, it sounds like you can help them from their first home to someone who wants to go into a retirement community in like the Villages or, or somewhere in the Jacksonville area. You can help them from any aspect they want in their life or investment property, it sounds like.
And it's really sometimes the best help we can do is nothing. Give them advice, look, here's a good lender to work with. If it's a brand new couple, here's a good lender, somebody that we trust that can sit down and give them a path to get them where they need to be to even buy, and so sometimes, believe it or not, the best advice we can give somebody with dealing with real estate is, hey, you need to just stay where you're at for a little while. And that surprises people,
You know, it is. And people think, oh, I have to go to the realtor and I got to do, I'm going to do what I want and I'm not going to listen to them. But sometimes the advice you guys give, whether it's from lender, insurance, accountant, you have contacts and multiple contacts in each area. So yeah, I reached out to the insurance guy. We didn't really jive very well. Hey, try this guy. It's a different person, or lender or accountant. You have multiple people you work with in different facets and specialties. And they have a commercial lender or commercial insurance person or residential or a rental person that's better. So people by different parts. That's impressive. You have a lot of what we call contacts.
Even new construction. People go to new construction. Well, guess what? The person you're talking to in the office works for the builder. Who are they looking out for? The builder, and we can help people save a ton of money or get a lot of added things to the home. And it costs them nothing, costs the buyer nothing. We're getting our commission paid by the builder.
That's great. There's a lot we went through today. Brad, thank you. Thank you so much for joining me today. I know our listeners are going to love hearing about this, and I hope people reach out to you based on this podcast and work with you because there's so much you can offer. I'm really excited about partnerships you can get out there with different people, and I hope this works out for you to get more customers.
And with you, Craig, I mean, we barely even dipped a toe. So hopefully it's enough that people will reach out and ask those tax questions and investment related and reach out to us because there's a lot more information that we can give them on a specific to their situation.
It sounds like we could do a second podcast too. Maybe we'll do another podcast in the future with you. Maybe have Lisa on the next one. Do the power couple next time.
Good luck. Good luck getting her on there.
All right. Thank you so much for joining me today. I really appreciate it. See everybody on the next episode of Behind Closed Books. Have a great day.
Bye-bye.
Behind Closed Books podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.